Perfect.
Cool. Yeah. So do I have to stand up or can I sit down? Anyway. Yeah. I'm very tired from jet lag. Yeah. So quickly, let me go through what Japan fintech ecosystem is, the fintech scenes in Japan. It's not gonna be that long. My name is Yuki. I am a practitioner, basically. I've started my career in investment bank, then went to the VC venture capital firm, and then did my small startup on the ESG fintech startup for the 3-4 years. And then now I'm also recently started my own business, more like consulting business, helping any international companies come into the Japanese market. And currently I work several projects. One is crypto related companies. The other one is cross-border remittance companies. Third is also another crypto rail system. So there are multiple of projects that are going on. But having said that, I think there's pretty unique about Japan fintech ecosystem. So I'll touch what they are. Yeah, in a nutshell, as I represent FinTech Association of Japan, which has been there for the past 10 years. One of the long established organization in startup ecosystem in Japan. There are a bunch of board members, but most of them, we have two segments. One is coming from big institutions, and the other one is a fintech. So we have a pretty nice hybrid of mix of talents in this organization. I'll tell you a reason why we have this mix. So as an association, we have a two-sided. One is fintech, and the other one is corporate enterprises, the big banks, right? It's been growing. Having said that, I think in Japan, we came to a point that things are a little bit matured, so that we don't have a lot more startups of fintech coming out of this ecosystem in Japan. But I think it's good. I think we're now in a stage, a fintech 2.0 in Japan, that I think there'll be great opportunities coming ahead. And especially international fintech players, I think in Japan is in a way mature enough, but at the same time, we do have small gaps. So I think there'll be plenty of opportunities. And then we have as an association, we help varieties of fintechs from alternative finance, from venture debt, insurance, all the way down to sort of data, AI, open innovation, securities, ESG, sustainability as well. And we work very closely with the regulators from Bank of Japan, FSAs, some Ministry of Economy and Trade, and Digital Agency, because we want to create this dynamic ecosystem in Japan. That's about it from a FinTech Association, but let me quickly turn on to sort of what the landscape looks like in Japan. I'll cover several topics, but first of all, some of the statistics that I think it's good to know where we are. Japan economy from GDP perspective, we are still number 3 or number 4 after US, China, and then it's either Japan or Germany, depending on the currency. But it's pretty big. And then from a fintech perspective, I think we have been growing very nicely in Japan, of nearly 70% since 2017. And what's interesting in Japan that kind of put us apart from the other market is that we are very much bank-centric, meaning the financial, existing incumbent big banks are very, very strong. And then in Japan, they have set up pretty nice infrastructure. So from fintech players, like practitioners' perspective, we have to somehow leverage how we can use their assets, not use their assets, meaning that we have to be in a way of a mentality of a collaboration rather than disrupting the current systems. So so that's really bank-centric evolutions. And in Japan, it's pretty big, but at the same time, most of the startups are concentrated in Tokyo at the moment. And other than that, the interesting thing is that Japan fundraising, capital perspective, every year, I think we see somewhere around 10% increase of money flowing into the fintech sector. And then in Japanese startup ecosystem, fintech has still been sort of, top 3 segment. Other segments are like an AI. So at the moment, recently, some of the heavy R&D startups are coming up, but still, FinTech is regarded as a hot market in Japanese startup ecosystem. But having said that, I think in general, one of the challenges we have is Japan's startup VC venture capital investment compared against the USD or EU. We're very, very small. It's only USD $8 billion compared against the US. In America, it's like 209 billions. In EU, it's 50 billions. So like, given the size of our economy, I think we are still things that we can do in terms of how we can attract more money coming in. So here it says Japan against the GDP, it's only 0.13%. Against the US, it's 0.62%. Yeah, so like 6 times. There's a huge gap. And also another thing is that the typical ticket size, the actual investment per each investment is very small in Japan. USD, based on data, the median deal is about USD 7 million. Having said that, in Japan, it's only less than 1 million ticket size, which is pretty small. I'll tell you why it is small later, but this is sort of key statistics. Japan GDP is big, FinTech is growing, but the money, the fundraising investment money is not there yet. And I think this morning I was also having a panel discussion with other colleagues from the different ecosystem. For example, Germany, they also mentioned that in Germany, the later stage venture capital is missing. So I think some of the countries are having the same issues. Oh yeah, another Japan's sort of characteristic is that some of the non-financial institutions are now trying to come to this FinTech or like trying to come into this financial sector at the moment by working with some of the banking as a service provider, like listed here. So how they work is that some of the railway company, airline company, housing company, electricity company, they all have individual consumers in a very wide networks of consumers. These companies work with financial institutions like banking and service provider, and then they are providing some of the financial services like mortgages, loans, debt, for example. So these are some of the sort of trends that we see in Japan. I think in the US or even here in Europe, we see some of the banking service provider. But I think in the other jurisdiction, I think one characteristic is that usually that has been served by FinTech players. But in Japan, these names are mainly coming from the incumbents. So these incumbent players are the one giving out these functions to the non-financial institutions. So this is some of the characteristics that I see. And in Japan, as a society itself, I think we have three main biggest society trend at the moment. So one is shifting cashless, meaning that in Japan, the cash is very king. Everyone use the cash, the physical cash. But there has been great shift promoted by the government, how we can move from cash to a more like cashless economy. The second is shifting demography. We have two very important shift. One is we are aging very quickly. Japan is one of the rapid-paced aging society in the world, plus immigrations. In Japan, because we are island country, we didn't have much immigrations in the past. But having said that, because it's aging, meaning that there's fewer labor in market, so we have to somehow rely on the immigrants coming from outside Japan. And third one is deposit to invest. Because Japan has historically been sort of very cash king economy, not many people did invest. Especially the older generation, they put their money into their wardrobe. They never touch it. These are three trends that I see. So first one is a cashless market. This is the sort of ratio in Japan. It is increasing dramatically. So currently somewhere about 40% by 2023. That's the amount of money used. But of course, if you look at some other countries, like next door we have South Korea, their estimated cashless transactions 90%. So 90% against 40% it is still very huge difference at the moment. But having said that, I think this promotion of cashless started back in 2015, 2016. And then these are some of the cashless players that emerged back in 2019. It says 2019 cashless players. There are many players that came into this field. But in the end, I think in the end what happened is, yes, when the market grows, there are many players coming in. But in the end, ultimately, there's only one player, which is called PayPay. PayPay is backed by SoftBank Group. They are the only one who actually now dominant in this field. 6% share for them. So most of the remaining QR code payment provider, they're gone. They're out of the market now. So so this is one big trend. And another one is the aging populations. So on your left-hand side, we have 1/5 of population in Japan is over 65. I think depending on the statistics, but some statistics say by next year or in a few years' time, 1/3 of Japan is over 60 or over 65. So which is very not good for the country. And then as well as there are fewer meaning there are fewer children, meaning there's fewer labor in the labor market. So our overall population is shrinking from, I think, even for this year, I think 1 million people. I mean, our population has decreased by 1 million or so. So so that's a little problem in Japan. And having said that, we do have not many foreign immigrants, foreign workers coming into Japan for the past over the decade. I think this statistics will definitely grow for sure. So these are some of the trends that we see, and because of that, we have many players now, many fintech players focusing on these fields like wealth management, healthcare, insurance technology, new workforces like remittance companies, accessible financial services. And then how we can bridge the two generations, from inclusive platform, how can we shift the money from the older generation to younger generation? So these are some of the trends that I see at the moment. And at the same time, deposit to invest, kind of following up in the point, is that yes, cash is still, if you look at the percentage of household financial assets, more than 50% are held in cash. Equity is only 14%. Pension is the next biggest thing. About roughly 30% of people put their stuff in pension or insurance. But the equity is very, very slim. That's if you compare against the other jurisdiction markets, like US, for example, equity market, equity is like 40% is equity. EU is slightly lower. EU is at 21%, but still it's much larger than what Japan is offering at the moment. So there has been a huge shift, a huge promotion from the government, how we can improve, how we can shift from the cash or like deposit into investment. So like they have created something called NISA, which is like similar to what UK is doing as ISA, and the name of ISA. So there is a bit of a tax benefits. You don't have to pay some of the capital returns if you get any return from the equity investment. So these are some of the trends that we see. And the next one is a fundraising landscape. Yes?
So did it work? Did it have any effect on investment in stock market? Because from that plot, I don't know.
Oh yeah, yes, it is working. If by looking at some of the active account numbers in terms of how many active equity accounts are available in the market, it has actually I think double or triples. So there has been more people shifting into this equity like stock exchanges at the moment. So which is good, but I think there's still much more room for them to do so. I think and then one of the reasons why people are still love to hold things in cash is that back into late 80s, Japan had a great, not recession, great economic growth. And then back then people are putting many money into the not only equity but also real estate investment, some other investment, but there's a huge bubbles, and then the bubble bursted, and then there are many people who lost loads of capitals out of this investment. So they have this underlying mentality that equities are these risky assets are something that they don't want to touch.
So only recently the Japanese stock market started rising again. I mean, it was like 20 years? It took like 20 years.
30 years of sluggish. Yeah. So
I'm surprised that.
Yes. But still the 30 and one of the reasons why the Tokyo stock the exchange market is coming up. Tokyo Nikkei 225 is coming up. But if you look, is that I think 2/3 of the investment, the money is coming from overseas institutional investors. Yeah. So we still do heavily rely on the monies outside Japan for the Nikkei 225 perspective. But at the same time, as an individual Japanese retail consumers they're picking up, especially younger generations. They see this as an opportunity. And and also another thing is that as in this 30 years, we've experienced the whole 3 decades of deflations. We never had a period of inflations until 2 or 3 years ago. Now inflation's picking up, so I think that should shift how we behave on this financial assets. Of course, if you're deflation, holding cash is a better way. That's where we are at the moment. And as a practitioner's perspective, my previous company, we went through the seed, pre-A, Series A round of the fundraising. But in Japan, if you talk to the Japanese startups founders, 99% of them, they're happy doing the business in Japan only. They don't have any, plan to go beyond Japanese market. The reason behind is that Japan market is still big enough for them to do IPOs in Japan. So in Japan, 90% of the startups, they choose IPO rather than going for M&A or secondary market. Having said that, I think there's a great shift in the exit dynamics, that there's more M&A happening. And then now Tokyo Stock Exchange is creating new rules that you need to have minimum cap of 100 billion USD, 100 billion Japanese yen valuations in 5 years. Other than that, you are out of the listings. So because of this, now many tech firms are now thinking about how they can bump up their valuations in futures. And these are some of the M&A activities that we see for the past few years. On your middle, the left-hand side is a FinTech startup, and in the middle it says the financial institutions, and then what they do and when they are bought. Most of them are bought very, very recently, like from 2022 onwards. There are many M&A activities going on. The reason behind is that some of the startups, they're really, some of them are unicorn startups or like very close to unicorn startups, and they are very, very one of the successful Japanese FinTech players. But what happened is that in, I think, 2021, 22, they've done fundraising, but the fundraising itself was they've done it at the very high valuations. So that, they did high valuations, but 2 years down the line, 3 years down the line, they're struggling to raise another capital. Hence, they had no choice but, go to this umbrella of some of the big financial institutions. But still, I think it kind of makes sense for both parties. For financial institutions, they're always looking for some of the new initiatives, new innovative functions, so that they rely on startups. Startups, most of them, okay, I'll say 60% of them, they focus on to retail customers, and these financial institutions, they have great coverage of retail customers, so that it kind of makes sense for them to work with them and then improve their valuations, improve their revenue, improve their valuations, and then hopefully they're thinking about going to public in a few years down the line. So in Japan, some of the challenges is that we have lack of later stage capital in Japan. we have very weak secondary market, as well as valuations is very weak, very small compared against the US or EU. So which means that the flip side of it, there's a huge opportunity in Japan that now we have more international players, international VCs, institutional investors now coming into Japanese market because first valuation is very small, and the Japanese yen has weakened against the most major currency for the past few years. So it makes it much easier for them to buy at the cheaper price. But having said that, there's a secondary market is now picking up, so there's a route for them to sort of get some returns in the near future. We see many opportunities at the moment. At the same time, instead of going for the equity fundraising, we have seen significant increase of loans or debt financing. Previously, this debt financing was very slim because the banks didn't want to give out the loans for the startups who is making a huge loss. But now we see many companies that are changing some of the lending model, especially when they're speaking with the startups. So some banks are now giving out many loans to the startups. And then from the startup perspective, there's no worries about dilution. So I think this is really picking up as a new market opportunities. So for me, I've seen many cases of international companies, international fintech players want to come to the Japanese market, as well as some of the Japanese fintech players want to do some business in Europe or outside Japan. But there are loads of challenges. For most, the language is a very biggest hurdle, language limitation for both sides. And then for the Japanese companies, as I said, Japan market is still big. Unlike, let's say, our next door, like South Korea, they're also pretty big in fintech scene. But from the South Korean market, the GDP isn't that big. So from the founders' perspective, they have to think about how to make money outside South Korea. So from day one, they're thinking about going globally. But in Japan, the Japanese fintech players found that they don't have to think about Japan outside Japan because Japan is still big. They can make good amount of revenues, and then they can go up public in Japan. So the mentality is a little different. And for lack of understanding from investors, shareholders, that's also another key. I've heard many cases that the founders, they think, I want to go global. But some of the investors, mainly Japanese investors or VCs, they said, no, you don't have to go. You can stay in Japan. You can just do business in Japan. Japan's market is big enough. Just do it. Because from their perspective, they want to have, of course, global market is much, riskier. Of course, there are huge returns if you're successful, but it's much riskier, so they want to control the risk, and then hence they advise the startup founders to stay in Japanese market as much as possible. But of course, there are few VCs that are now promoting more global scale, so there's been a bit of shift in that. But the other side is also very tricky. There are some of the international players coming to Japanese market. The language is also one, but of course the different business custom is blocking some of the business in Japan, meaning that Japan decision-making process it takes very long. What I've heard is that let's say if you're selling a product in US, it is decided in a week. But in Japan, it takes 2 years for them to decide. So there's a long commitment needed. As well as we have a pretty big gap in terms of talent shortage, especially compliance people. Compliance, if you're a good compliance officer, you probably stay in good investment banks or good banks. But from fintech perspective, we need someone who knows the compliance as well as who knows aggressive. How can we bypass some of the rules? That maybe some of the stuff that's not written in the rule books. So we need to somehow grab, somehow we need to take these good compliance officers into the labor market, but usually that's very scarcity of the talent. So that's something that some of the fintech players, especially coming outside Japan, are struggling to hire in Japanese market. Still, having said that, we've seen many success cases. One is TransferWise, now currently called Wise. One of the reasons why they came to Japan, I think 2014 or 15, pretty early stage. But one of the reasons why they are now successful in Japan is because the CEO, was very patient. They had a pretty long-term commitment in Japan. It took them, I think, 2 years for them to get the first licenses, but they were there putting investment commitment to the people, and then now they are really successful. And Square, for example, at the bottom, one of the success factor is that they work from day one with a large large financial institutions in Japan. So instead of going by themselves, they kind of partnered. They had a good partner in Japan doing some businesses. So common key success to successful in Japan is first of all is patient long-term commitment is very important, and second is adaptation to local ecosystem is very important. You have to understand what's the business custom, what's the ecosystem like, and the third is early collaborations is definitely needed. You need to have a good partnership. As mentioned in Japan, they don't like any disruptors, but rather we do respect the harmony as much as possible. So, instead of fighting each other, it's how can we work together to create a new market. So this kind of mentality is very much needed to be successful in Japan. Yeah, that's about it. I think it's right timing. Yeah. Thank you very much for your time. Thank you.